when the market is down. That's very, very wrong also to be reckless. But what I'm saying is to make calculated, educated decisions on investments that you have the most conviction into. ETFs, indices, comparing it head to head versus individual companies. Companies can close down, individual companies can close down, but if you're buying the indices, the chance of bankruptcy is not there. Hey guys, so I got this question from Rio David, who's a follower, subscriber from Vancouver, Canada. And Rio is asking, Sir Marvin, what if the bear market or what if this long downturn takes a very, very long time? What would you do? Please do note, guys, if you have any questions, put them down below, DM me, Instagram or Twitter. Send in your questions there and I'll read the best ones and I'll try to see, what's a general consensus of what people are asking, and I'll make a video on top of that, like this one for Rio, and you also get a shout out on top of it. So, but it's not just Rio asking it. A lot of people are asking that. Some of them have invested when the market was high, when it was toppish, when at 60,000, 55,000, 68,000, 69,000, Bitcoin was higher. And if you look at it also from a consensus level, or at least from a market effect level, when the market is generally higher, a lot of people are excited. A lot of people also want to put in more. A lot of people want to add. Even generally speaking, the risk and reward ratio that you're having is not as prudent as when the market is lower. It's just that when the market is lower, there's a lot of fear. There's a lot of uncertainty. There's a lot of doubt. And you hear a lot of things saying that, oh, it's going to go to zero. Oh, it's going to go to 21,000. Or it's going to go massively lower. That's the narrative when the market is fearful, when people are generally bearish. But from a long-term standpoint, that's what will give you the ability to get volume at lower prices. And should it come back to even an inkling of where it was before, you already get a gain. If it goes back to its all-time high, you actually get more. And if it actually exceeds that, then you actually will reap the rewards of it when you start to take on the risk. I'm not saying that you should be reckless when the market is down. That's very, very wrong also to be reckless. But what I'm saying is to make calculated, educated decisions on investments that you have the most conviction into. And should this prolong, it actually means that if you're in it for the long term, then you have the ability to build a very, very long base. Especially if you try to look at it also from an understanding that I'm in my 40s, I want to invest up until my 60s or 70s. Whatever hiccups that would happen in 2022 and 2025 won't matter in the next 10, 15, 20 years. The concerns that I saw in 2008, in 2013, 2016, they were there, they were real, they were relevant. I'm not undermining them. But a lot of those things right now, when you try to look at it, if you acted based on fear and you hindered yourself from deploying into assets that you really, really knew, that you studied, and please do note that the key word here is deploying capital into assets that you studied. It's not just deploying capital blindly. It's not just deploying capital so that you can somehow, in Tagalog, makabawi ka sa losses mo, or at least just for the sake of averaging down. Then it's actually wrong. It should be an educated placement, an educated allocation on investments that you actually believe in, that now you have the ability to actually buy it lower. It's true in stocks, especially in the US market, especially in the crypto market, there will be volatility, there will be movement upward that could give you an upside return in the next few minutes. But if you're just looking at it from that perspective, you're shortchanging yourself, because there's an ability for you to be able to stack properly. There's an ability for you to be able also to build a base. And if you notice it also, the ones that have really, really made it, the ones that have built something that wasn't just for the first year or the first 2 years, but have built something that's multi-generational, that have built something that was built to last, they had the ability to survive markets where everyone wasn't so excited. They had the ability to have the conviction to build a base when it wasn't as good. And please do note that this isn't a call for you to invest right now. If you don't see anything worth positioning in, or if you think it's still overvalued, or if you still think that there's still a downside, then well and good, you follow that. Because ultimately, what will make you do well in your investing is you following your plan. Ultimately, what will make you do well in this whole financial space is you looking at it from what are your goals, how long does it take for you to hit your goals, and what you're doing while you're actually waiting. Because downward moves, longer bearish moves, allow you to stack. The name of the game never changes. It's always buy low, sell high. But the name of the game also doesn't change, that at the moment where it's so fearful, not everyone wants to get in. Everyone wants to get in when it's so exciting, everything is high, everything is flying. But when you realize it at that point, that's where everything's also expensive. That's where everything also from an asset class, you may not get as much upside as possible. And if there's a couple of things that we've seen over the past 2 years, the drop from the pandemic allowed people to stack Philippine stocks, crypto, US stocks at prices that we have not seen for a very, very long time. I don't know what's going to happen in the US market. I don't know if a recession will happen. But what I do know is if there are certain stocks, from Apple to Microsoft to Tesla to Google to Amazon, companies that are changing the status quo, but not just changing the status quo, are highly relevant today, but are not just focused on the present, but are doing things that will disrupt the future, and their prices are lower, then I would gladly do what I can to get as much and accumulate of them as possible. And I said this in a video, indices do well. If you don't want to analyze the stocks on an individual level, you don't want to analyze them, that you want to do the nitty-gritty, and you just want to look at it from, if you get the S&P 500, there's a large chance that that entire index will outperform a lot of the other individual stocks. Then well and good. ETFs, indices, comparing it head to head versus individual companies, companies can close down, individual companies can close down. But if you're buying the indices, the chance of bankruptcy is not there, because please do note that indices are recalibrated. And if you have the largest companies, there's a very, very big chance that if everything goes bad, it's the smaller ones that get hit. The larger ones that have cash, that have a very, very sound and strong balance sheet, have the ability to even purchase the smaller ones. Should there be companies that are part of the index that get hit, they get replaced by something else. And that will form the 30 stocks that are in the index, or the 500 stocks that are in the index. Especially if you're a person that's into indices or ETFs, downward moves allow you to buy a lot of these issues at a cheaper price. So to answer your question, if your time horizon is long and you have full conviction in what you're going through and your financial status is not hit, it allows you to do something that is worthwhile, and it will allow you to actually build a base. If you get your emotions out of it, only put money that's allotted for investing. Don't overinvest. Put money for your savings, put money for other things that are important to you, and only put an amount of money that's really allotted for your savings, only allotted for your goals, because that will give you conviction when the market is choppy. I hope you got a lot from this. Want to learn more about investing? I have an Investment 101 Masterclass. Links are in the description below. You can watch it anytime. I also have a fundamental analysis masterclass and a technical analysis masterclass that if you want to learn the basic rudiments of investing in the markets, or even in the crypto markets, if you want to use technical analysis, check it out down below. I have 5 books, part of a Stock Smart series that you can read. If you're the person who loves books, have that down below as well. And everything else that you want to know about me, how you can reach me, check it out in the description below. Send in your questions if you guys have anything. This is marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.